It's a delight to have Marnie Kerr on this episode. As the Chief Member and Growth Officer of Defence Bank and a Director on the board of COBA, there are few better qualified to talk about member value. We explore what success through member value looks like and talk candidly about whether the way we measure it is keeping up. And Marnie brings some really clear thinking to that question. I'm John Critchley, and this is From the Helm with Polaris. Welcome, Marnie, to From the Helm. It's great to have you on the podcast. I'm looking forward to a very interesting chat today. So our theme today, as we discussed earlier, is about member value and how do we do success from that. So maybe we go into the first question, which is, just to kick things off, every mutual bank says that member value is what sets them apart. When you look across the sector, how do you see the sector's thinking about member value evolving, and what does success through member value actually look like?
You always start with the tough question, John. Look, I think you're right. Member value for us as a mutual is very different than say a big four, because I think for us in the sector, member value goes beyond balances and product holdings, but the value is also emotional as much as it is financial. How do you measure that, and are we true to that? I think how you measure it, you look at things like trust. Do your members feel that we understand them better than, say, a generic big four who's very ubiquitous, can? Do we get the pressures that they might have in their lives? So a lot of mutuals, like Defence Bank, have a vocational bond, and so our members have a very different need than the everyday Aussie, just as police or nurses or others do. And I think the same can be said for the mutuals with community bonds as well, where often a number of our mutual peers in communities are serving an underserved market, and so that's where the value really starts. The hard truth to it all, though, John, is that banking is really a commodity. We all have the same products and, essentially the same services. So I think the difference is how you deliver them in a way that meets your members where they are. I think for the greater part of it, I think the mutual sector does that really well. That being said, of course, I think we can always improve the way we're doing it. And I think what that comes down to is for all of us to really understand what is our differentiating strategy and really retaining a firm view of that in terms of then what does that mean for the member.
Yeah, it's interesting. And within your membership, you may have some traction and understanding of what the differentiator may be, but there's some research that we were looking at not long ago that suggests that 80 to 85% of the broader market, not people who are in mutual banking, but the broader market, has limited understanding of what customer owned actually means. That's a sector-wide issue. We've talked about that before, and is commonly understood. So where have you seen genuine progress in closing that gap so that people understand, the broader market understands that value of customer owned, and where do you think there's more work to do?
So I think in terms of where really great work has been done is those mutuals that really have held true to a differentiating strategy. If I can provide some backdrop to my answer, about 18 months ago, I had the privilege of going to INSEAD to attend the Advanced Management Program. And one of the exercises we did there was this, it was called the Phoenix Encounter. And so the Phoenix, that catches fire and then, turns to ashes and then rises from the dead. And the challenge in that Phoenix Encounter was to imagine that if there were no resource constraints, how might unconstrained firepower destroy your current organisation? And by understanding how you would destroy yourself, you then understand how you can differentiate to actually get better and stronger for your market. There's a really great example of that in Amazon where Jeff Bezos has famously said to Steve Kessel that I want your job to proceed as if the goal is to put everyone selling physical books in the world out of business, including Amazon. And that's actually what drove the Kindle. So it's absolute genius. And so when you think about that from a banking context and for us as mutuals, if you really understand what could destroy you, I think from that, the thinking around what differentiates you can come through, because we don't have to be a big four to be successful. We've just know our members better than anyone else, and that's where the secret sauce is. And I think the challenge for many mutuals, particularly as we get bigger, is sometimes losing sight of what that differentiator is and what your strategic moat is. And I think what we do see is that the banks that are really holding tight to that are probably, the mid-tier mutuals. And, as a result of that, they've probably got the strongest performance as well financially.
As mentioned before in conversation with me, is that you don't need to win in the entire market. 10% is good enough, Mutual banking isn't there to replace banking as such. It's there for those who actually value the differentiating aspects of the banking, maybe particularly the community bank that they are representing. Do you think that we're being clear enough to the communities that we target about that value proposition?
Primary bank status, for example, is a magic measure and, something that we all should be chasing with our member bases because we know them better. But Aussies just don't bank that way anymore. I don't know about you, but I bank with 3 banks. And I would say that's probably pretty normal. And really the big 4 do still continue to dominate, even with our mutual members, because they aren't everywhere. And so I think certainly what we've come to terms with at Defence Bank, and I think a lot of mutuals have, is that instead of chasing that something that doesn't really reflect how people behave, i.e. main bank status, you've got to chase something more meaningful. And you don't have to have members banking with us exclusively. We just need them to choose us when it matters most. And I think that's where, in understanding your members and what matters most to them, you can work out, well, what is the differentiator? So, for example, in the life of a member of the ADF, their life is really complex. They are posted around the country every 2 to 3 years, which triggers a do I rent or buy decision quite regularly. They have a series of really complex entitlements that they want to maximise. They have deployments, transition. And so these moments leave really clear behavioural signals that we need to pick up on in order to go, okay, well, how do we drive value for the member in this moment that's really critical for them? And I think banks that are doing that really well will continue to succeed. But I do think it's mixed in terms of how we're all tackling that.
It sounds like key to this is really understanding, and this sounds so simplistic, but understanding who your market is and who's in that market and what's your unique value proposition to that market. And I guess that comes down to, when you do know them well enough, I guess you'll understand how to measure things. So that goes into our next topic, which is really around, how do we measure success? And across the sector, how do you see mutual banks measuring whether they're actually delivering on member value? What does the sector tend to rely on, and how well do you think those measures reflect what's really happening?
I think we all rely on the corporate scorecard, and that's really important because it does tell us if we're growing safely, sustainably, and efficiently. But whether or when it comes to measuring whether our strategy is working, that's a really different question. And honestly, John, it's actually a really hard one. And so I'm not sure we've got it right. I don't know if the sector's got it right. I think there's certainly pockets of it, and we're certainly trying to work out, how to measure value beyond the scorecard. I'll give you an example. So, a moment that matters deeply for our members is, of course, buying a home. And particularly given they are in and out of the market quite regularly with their posting cycles, and it's a bit more complex than the normal Aussie. Although we're all chasing the home loan and the mortgage, so I think it's probably one in common for all of us. We have implemented, because we've got organisational NPS, which everyone has, but it doesn't really tell you too much. You can drink your own Kool-Aid a little bit on that one, I think. So we've implemented a very specific lending NPS survey, and that measures both a secured loan and unsecured loan at different stages of the member's experience, to really test, are we delivering something really simple and easy and understandable for the member. What has come out of that, interestingly, is that we score very highly, and the score and the comments that we get back are really interesting, because what our members always talk about is the person that's helped them. So, John was amazing. He really helped me understand the process, and he made it easy for me. Marnie, was great. She made it simple, and I really feel she looked after me, that type of thing. And they're the typical comments. But what you pull out from that is it's probably more about what they're not saying than what they are saying, right? So what they're saying is our people are amazing, and the service proposition is different than what they would receive at a Big Four. But we've got some work to do around everything else in the ecosystem. Our people are always making up for the experience. So, that's around the process and how we continue to drive a really efficient experience for our members. It's around the educational content, the whole ecosystem of it that, we need to put together so that we're not relying on one aspect of differentiation. You need more.
As a multidimensional aspect, that's really important. And what was interesting in some of the other work that I've done, and I did touch on this in one of my blogs around the loyalty illusion, which we talked about earlier. The interesting thing is that satisfaction can actually mislead, and I think that's what you were hinting at just now. Yeah, the measurement of it. So most dissatisfied, what we found in the research we've done is that most dissatisfied segments show slowest switching rates, right? Which is interesting. Satisfied members still hold shallow relationships. So inertia is a factor here, but also, what's in it for me is also a driving factor. And that can change from when you fill in an NPS response to the moment when you have to make a decision. How do we as a sector, measure the real value so we can actually respond effectively to the leading and lagging indicators of true value? What are your thoughts?
I think there's a couple of things here. Firstly, it's going to be different for every bank, based on what you're trying to achieve. We have a very clear roadmap for the next 10 years of who we want to be as a bank and the choices that we're prepared to make, what we will do and what we won't do. And so that is really important. And so anchoring back to that constantly means that we know we're making the right choices to deliver the value that we want to. Where I think the challenge we face is that you've got a lot going on, particularly around regulation, everything else hitting you, and you can drift off into activities that really dilute your impact. And so that's where I think the rub is around, what you're talking about. And so, continuing to align and have the right data and really understanding the life of your members is what will give you the confidence you're solving the right problems. But if I can go back to sort of that challenge of staying focused, every dashboard you have will grow another dashboard. And so, also the challenge, I think, is being clear around operational management that you need to run the bank, and then your strategic measurement, which tells you if you're the bank that you're setting out to be. And that's not easy. And so instead of trying to measure everything, it's really prioritizing the signals that matter. So, for example, we would look to measure are our members engaging with some of the content that we have before they then engage with the product, which means that we're providing sort of that holistic end-to-end. So they're, I think, the types of things that will tell you whether your strategy is getting cut through and whether you are driving value the right way.
And I think the key takeaway is that some of the traditional measures, such as NPS and customer satisfaction and so on, may be nice in channels and so on, but they don't necessarily tell us the true story of member engagement and member value, or the perceived value that the member has for you. Have you seen anything that actually gives you a better handle on? I mean, you've covered a few things, but just want to step back. Are there any things that you've seen that actually gives you a better handle on member value or the perceived value to members?
So I think there's probably a few areas that we could go there, John. One is around the experience outcomes, and your ease, simplicity, your speed, your accuracy, how you build confidence with your members through the experience that you deliver. And more specific NPS type surveys can tell you that. You can also, I think, assess that through your product and pricing value. So are you driving your credit policy and loyalty in the right areas that drive a differentiation for members? There's also that relationship value as well. So, I mentioned before, it's very difficult to become a member's main bank, but you still, but you be their primary transactional bank, for example, where, you double click on the phone and you're the first card that comes up, that really you may not be the one with the majority of the product holdings, but if you're the bank that they use most, that certainly does go a long way to showing the advocacy that you're generating for your members as well. And then I think overall too, John, your operational value is important. Your cost to assets over time, like your efficiency and how you're delivering products and services to members, really does matter. It is a corporate scorecard item, but it is a really important one as well.
I'm going to go off piece a little bit here, because I think there's something interesting. Do you feel that possibly in the mutual banking sector, we strive hard to be measured as a bank? Whereas maybe member needs to be more at the front of that in some way. What would that look like? How would you measure that? Was that something that has an interesting angle to it? Do we need to measure ourselves as a bank?
Unfortunately, I think we do, because we are a bank, and so particularly given that for all of us as mutuals, our only way to generate capital is through having a strong return on equity. It does matter, and the regulation that we face into also means that you need the right measures. So I think it's an and, not an or answer on that, John. That being said, do we need to deliver a 17% return on equity like Commonwealth Bank has? No, we don't. Do we need a cost to income ratio of 45% to be successful? No, we don't. So it's just the measures are important, but it's at what level is appropriate for our banks, and that'll be a little bit different across the sector too.
And it's about finding that balance.
Yeah, that's exactly right.
And being able to measure for that balance is critical. And I think that's the struggle that you were alluding to earlier. Is the measures have to be standard in some way, but at the same time they also have to be appropriate to the context.
Yes, yeah, that's right. And as I alluded to earlier, the traditional banking measures do tell you that you're growing and you're sustainable and you're efficient, but you do need a second set of measures which may not be as widely published, which tell you if your strategy is working. And I think they're the really hard measures to nut down.
Where you see the biggest gap between how the sector talks about member value and then how it actually delivers it to different segments. And this is about segmentation and thinking about how do we address different elements of our membership base and indeed the market, and what would you change, in the approach that the sector has taken in this regard?
Yeah, it's a really big question, because I think we would all potentially segment our members very differently. At Defence Bank, we segment our members based on their life stage within their life of defence, for example, compared to other banks that might segment their members based on a type of demographic or other aspect. So if I talk about us, where we're really segmenting more on life stage and where they're at, the value is really going to be around how does a member engage with us at and around that life stage that might then lead to engagement with a product or a service. Are the conversations within our branches and our contact centre starting with real defence-specific sort of financial questions? Are members coming to us first, when they're posting, for example? And they're the things that will tell us if the strategy is cutting through, but also if we are actually being different or not. Because if they go to NAV and ask the same question, for example, then we're probably not driving the value that we think we are. And so how you measure that can be difficult, because it does require really good data which tracks kind of the interactions of a member through your integrated channels to know where they started and where they ended up. That requires also the good technology platform and to be able to track that. So there's a lot of enablers to ensuring that you can track that life stage journey and where they start and where they end up.
And life stages means there's evolution in everyone's life. Everyone has an evolution in their life, and your needs change. And I think what's interesting is that those needs change. Those changing in my needs through my life cycle actually means they're a transition from the classical lens of segment. Right? I used to be, a young up and comer, right? Then now I would have turned into a sink, right? Then a dink, and then the next thing I know, I'm a middle-aged white guy. It's these are things that we transition through, sometimes voluntarily, but usually involuntarily, and it's how people break down things so they can understand and classify your needs. But I think what's interesting is that in the member-based organizations where value of member is really important, understanding more than just the economic relationship you have with your environment is more important, is actually really important to help with differentiation. And I think what's interesting, I'm sorry, I'm being a little bit of a monotribe here, but there's one thing that I think is really interesting because it's creating disruption about that relationship with member value and understanding member has been the broker network in the mutual banking sector. So maybe we'll just dig into that, because how do we not turn away people who are genuinely looking for the best possible deal and they like you through broker engagement, broker relationship. Yeah, they've already got an intermediary who they trust, the broker. The question then is, how do you convert them to becoming advocates and be feeling like members with you? And how do you transform the relationship from being about transactions through the broker network to a real member relationship when they come to you?
So what was it? Latest MFAA data shows that 76.7% of Aussies are choosing brokers for their home loan. So it's a huge, huge proportion of the market. And there's two things there. For banks that do use brokers are a partner, and so they need to be treated that way, because you do want to ensure that you're getting, the opportunity to talk to their customers, but then the opportunity to retain them through the life cycle. Even better though is actually the member coming direct to the bank, because then you truly own the relationship, and I think that's really what we all want, and certainly seeing the shift across the entire banking industry to rebalance to a proprietary portfolio. And that's where I think, data is a really strategic asset for all of us around when members join before the home loan, and then how you work with them, through those life stages to convert them into a home loan member, so they're not going and talking to a broker and then potentially moving their banking elsewhere as a result.
And this really puts a lot of pressure on a member bank who is treated as a commodity in that broker arrangement, but you have not set up your business model to be treated as a commodity.
Mm.
And I guess what we're trying to do here is really establish, well, how do we transform that relationship to becoming the differentiated relationship that you want? Do you have to actually say, you know what, we're going to select out of that kind of market. We need members who actually come to join us because of what we offer as a differentiated member value organization? Or do you bring them in, put up with the churn you might get, but you get then some members who stay?
For banks that are partnering with brokers, you've got to partner with the right brokers and really work around portfolio and making sure that, from a best interest duty point of view, that the broker does see you as the best option for their member. And I think that's difficult because of the competing motivation that sometimes.
Absolutely. And I think this is the struggle that the entire sector has right now. And the mutual banking sector is not set up to have such a strong brand position in the market that people retain with you because they trust the brand implicitly. It has to come through experience in some way. So, in some way, you could say that the broker evolution is a challenge to this segment, to the mutual banking sector, to sharpen its proposition in a way that actually, when people come in through the door, they don't want to leave ever in some way.
That's right. And so really what you want the member saying to the broker is, I don't want to leave Bank X. I want to stay with them. Can you help me get a better deal there? Rather than the voluntary shift elsewhere. And the only way that will happen is that you create a relationship beyond the home loan through your service proposition, through the way you interact with your members, through great content curation that meets their individual needs, and through that engagement, which we do need to do digitally. We can't afford to be human to human, and that takes work to really sort of codify that and work through what those engagement points are and how you engage, that they feel part of a community, so they're not going to leave for 5 basis points, but rather
That's right.
Stay.
And so that, I think, goes back to what we were talking about earlier about how we behave as a bank, and we must be measured as a bank. And you made a very good point that, of course, you have to, because you're an ADI licensee, right? You can't ignore that fact. You're regulated and you have to behave like a bank and be measured as a bank. But at the same time, there's more to it than that. And I think what you're talking about here is, something that hints at where that mechanism can kick in. We can actually think about how we behave in the relationship with members so they don't experience you as a bank. Maybe that's the trick.
Yep. You're onto something, John.
Oh no, I didn't think I came up with that. That was you. Well, Marnie, this is the point when we come down to the common question that we like to ask all of our guests on the show and on the podcast, and it really boils down to this is the same question. So how do you think about measuring success? Because this is fundamental, right? We've talked about some of the aspects that drive member value and so on, but let's come back. Let's distill this down to the core. How would you measure success?
Success is a healthy corporate scorecard, without a doubt. But there's an and to it, which is how you measure that your strategy is working. And I think the key measure of success there is that your members choose you when it matters most. And then it's working out, well, how do you measure that? And so, that might be, as I mentioned, that, so an example, we know for our defence members that posting cycles tend to occur in that August to November period. So if our engagement with our content online is spiking in those periods, we know that they're choosing to engage with us in a moment that really matters. And so they're the types of nuances I think we need to understand if you are there when it matters most. And again, that will differ, I think, for each bank, depending on their target market, how they're choosing to differentiate. But I think that's the important way of looking at things is when it matters most, how do they choose you and how are they engaging with you and how do you measure that they are?
I think that's really interesting. You're talking there about those moments when they are indeed, and they reach out to you, and this is where maybe there's a distinction with regular banks because you will have a more empathic approach to it, but it also demands that you actually have signals about when they are in need, so that you can almost create the space for them to engage with you.
Yeah,
that requires investment and also a way of doing business and being present in the market. What's the trick to doing that, do you think?
Oh, again, if I had the answer, things would be different. But it's really understanding where the financial decisions for members begin. And if their first step then is your content, your tools, your people, then the strategy is working. Where you've got to be their guide when decisions are the hardest, and that's the job that we set out to do. As a mutual bank is be there when things get tough or when things are confusing and to simplify things. I would say, look, I'm certainly not pretending that we've solved all of this. We absolutely haven't. And, we are at Defence Bank still, working through how we roll out, a very differentiated ecosystem and the measures that will sit around it. Because you do need to get the experience right first and to make sure that you're designing the metrics around it that really genuinely reflect your members and what matters to them and not the, old-fashioned banking stuff that we traditionally rely on because it's easy.
I think you're absolutely right. There is behave responsibly as a bank at your core, but have something really different in the way that you are displaying yourself or playing in the market, so people can see that there's something different about you that actually resonates meaningfully to them individually. Well, Marnie, it's been an absolute pleasure having you on the show, on the podcast, and thank you so much for making time. I know that the viewers will appreciate your insights and candor on the podcast, and I look forward to maybe seeing you here again. Thank you very much.
Sounds great. Thank you so much for having me.
It's been a pleasure.